Let's stick with the inflation theme. Our guest sees an increased risk, perhaps moderate, of increased inflation under a Trump administration. Let's bring in Remi Olu-Pitan, multi-asset fund manager with Schroders. Thanks very much for joining us.
Thank you.
So why do you think Trump's policies could lead to more inflation or marginally higher inflation?
Well, what we're hearing and what was discussed in terms of the elections is tax cuts and also tariffs. That sends inflation higher. Directionally, you should expect slightly better growth with regard to the tax cuts and higher prices to be paid in terms of the tariffs. We think that that's what bond markets are starting to price, and that's why yields have been moving higher in the US.
Maybe we'll put up the 10-year bond yield, because often those longer bonds, they're driven by inflation expectations.
Absolutely. And you have seen a pickup in inflation expectations as we move towards the election, moving up about 0.3. So the market is starting to price that inflation is heading back higher.
Is there a risk of a serious jump in inflation? I know it's a very hard thing to predict.
I think it is. There is a risk. I mean, we think that we're moving in inflation cycles. Certainly what we're going to be discussing this decade is not necessarily the growth cycle, but the inflation cycle. So we had disinflation last year, and this year we believe that that is starting to bottom and things are lifting back up again. What we don't know is how high, but certainly the direction of travel is higher.
It's interesting because we keep hearing that governments have been falling because of inflation. Voters are so ticked off. So if inflation comes back in the US, Mr. Trump and his colleagues won't be delighted.
Absolutely. However, it depends on the type of inflation. Certainly what we're hearing is that on the tax cuts, whilst that could be inflationary later on, there is an immediate relief at the very beginning.
Right.
Secondly, with regards to tariffs, the ambition, now this is the ambition, we don't know whether that's what's achieved, but the whole aim of the policy around tariffs is creating some kind of fairness with regards to America versus the rest of the world. The whole ambition is to put more money in the pocket, certainly with regard to the low-income earners. That was the ambition with regards to the immigration policy as well. So we do believe that whilst this is inflationary, perhaps it is discussed as giving more money, putting more money in the pockets of low-income earners. Maybe that might be a way of getting through this higher inflation that's likely to come.
I know Conrad Black, the former owner of The Telegraph, and he's a Trump fan. I remember him making that argument that the restrictions on immigration were very good for lower-income US workers.
I think that is the discussion. We will see whether that becomes the reality.
On equity strategy, you are beginning to broaden out beyond US large caps. Are you in the camp that the smaller stocks may do better?
Finally, they should do better. I mean, it has been a really tough time. You could call it a famine for small cap investors. We think that what we're starting to see, particularly with regards to positive policies on the tax front, particularly with regards to pro-growth. We're seeing an improvement in growth globally, specifically in the US. That could favour the small cap arena, both in the US and also globally.
OK, so small caps could do well in the US and in other markets as well.
Absolutely.
OK. What about bonds? Because you're involved in all asset classes. You're not making a direct call. Say, start with US bonds. You're neutral. You're not making a big bet on long US bonds or avoiding them and sticking with short bonds?
Well, we do prefer short bonds,
Sorry.
absolutely.
Okay.
However, you're right. We have moved from having a negative view on bonds, particularly in the US, to slightly neutral today. And what we mean by that is that the bond yield now hovering around perhaps 4.3, 4.4 today on the US 10-year is certainly more attractive than where we were 3 months ago. So the market is moving with our view that inflation can surprise on the upside. Perhaps there's a little bit more to go in terms of higher yields, but certainly at these levels, we think a fair amount of that view that inflation's coming back is reflected.
And actually, I forgot to ask you about this. You're considering broadening beyond US large caps, but you do see good value in US financials.
Yes, we do see good value. I mean, a lot of this, again, is related to Trump victory with regards to more deregulation that could be very beneficial for financials, particularly with regards to their earnings. So we think that there's a pocket of opportunity with regards to US financials. Now, again, I have to specify that that's a view with regards to the US financials. That view is not supported outside of the US. We do see some challenges with financials elsewhere, particularly with Europe.
Why is that?
Well, we've had some, European equities are in a really tough space right now. We've got political risk, which is not particularly favourable. Geographically, we're stuck between challenges with regards to Russia, Ukraine, as well as what happens on the tariffs. So it's not a great place to be. At the same time, European growth has disappointed, and this matters for the outlook for financials. Finally,
just give us the perspective of global investor on Canada. Obviously, we have a tiny stock market, but when you look at Canada, if you were to decide to put more money into Canada, what would you want to see?
Well, Canadian equities have done very well this year. I think the key for Canada is, A, the outlook for the economy, domestic Canadian economy. We've had inflation surprise positively. What we need to see is some more improvements with regards to the unemployment rate. But looking at the TSX, what matters is outlook for precious metals, financials, as well as energy. And again, on the precious metals side, that is doing quite well. And investors are really keen on gold and precious metals and are trying to diversify how they get exposure to it. So as long as that sentiment continues, there will be demand for Canadian equities.
Remi, thank you very much indeed.